Hey, Norm Reed here from PropertyInvestingInformation.com, an awesome source place for real estate investors interested in commercial real estate investing. Whether you're a seasoned single-family investor looking to get into some commercial deals, a complete newbie, or an existing commercial investor, there is some valuable information here for everyone. What we have for you today is a content-rich audio article that covers a particular aspect of commercial investing that's going to be important to you, the investor. So here you go. Hope you enjoy.
Commercial real estate investing. There are 6 deadly mistakes that investors make when they're buying commercial property. Investors in the real estate business can make mistakes when the market is up as well as when the market is down. But when the market is down, the results of those mistakes tend to be really bad. But just because you have all cash or plenty of backup does not mean that you cannot make a mistake. The investors with the least amount of money, they're looking for money, so they'll hype up the deal when they're trying to get other people into their deal. Every person that has something to do with the deal needs to have some other kind of skin in the game. There are 6 of the most common deadly mistakes investors make. Number 1, violating the SEC commission laws. Number 2, not doing due diligence right. Number 3, building, renovating, or making additions without permit. Number 4, not getting a survey done. 5, expecting someone else to do your due diligence. Number 6, not analyzing the local and regional economy properly. We will take each one of these one at a time. Number 1, violating the SEC or the Security and Exchange Commission laws. What the SEC really is for is they kind of moderate all investments in real estate investing. Is just another one. So many investors get so caught up with trying to make a big profit, and they go around getting a whole lot of people involved in their deal. But the SEC violation comes about when the investor promises a guaranteed investment or yield on the real estate or rate of return. There are people in jail right now as we speak for making this deadly mistake in their real estate business. They not only are in jail, they lost all their business. There are other ways to involve others in your real estate business financially, and one of those ways is to have all the parties that give you money have some sort of direct ownership in that property. It could be a number of ways, but they need to have some direct ownership. It's called getting private money investors. They're good for the real estate business, but there are certain government regulations about how you go about finding people to help you invest. Number 2 of the mistakes is not doing adequate due diligence. You can literally lose your shirt omitting one little piece of real estate business information. One of those, which can be really devastating, is the zoning and the environmental laws. They can really be a big issue, each one of them for that matter. Many current owners are grandfathered in, so to speak, and so newer laws may not apply to them. Especially in the zoning, they're kind of grandfathered in, but environmental laws, they'll never let you get grandfathered in. So what you want to do is, if you're getting involved in the real estate business, you do your proper due diligence and be mindful of all these 6 deadly mistakes. Number 3 is building, renovating, or making additions prior to permit approval. Don't expect one department of the government to actually talk to another. I know you think that, well, it's all one government and they should talk to each other, but in fact they don't. So you may have as little as a 50% chance that everything about your plans will be approved. Now, how this really goes down more often than not is when you're building a new project, and suppose they have given you a permit to do the foundation. So you start doing the foundation, but they haven't given you a permit or the okay for the building or for a lot of other things. So now you go start with, and spend a lot of time and money and investors' money and everything to do the foundation comes along and they don't approve the building, and now you have all this money into the foundation. So that's what I mean by starting without all of the permit approval. There are some investors who just don't even bother to give approval, and that's a different story. Number 4, not getting a survey done before you buy. You know, in the past, the good old boy handshake deals were the norm. But nowadays, any easements or special arrangements regarding the property, they need to be recorded at the courthouse. And if you find past ones that are done, you need to record them also. Be sure to get a current survey, including all the easements, utility crossings, and everything. The real estate business has a way of making the unprepared lose their shirt. And you can avoid that by getting up to speed and knowing what you're doing. You want to make sure that the property lines, they're well established before you purchase. Any possible disputes or problems need to be handled before you take the next step. The property laws may have even changed, so you need to find that out. That wouldn't change actually the property lines at all, but it may change the impact. The zoning laws may now require a lot more land to build your complex. Sellers are not usually out to take advantage of you, but it is not their responsibility to do your due diligence. This is one good way to kill your real estate business permanently, so just don't leave it out. Number 5, expecting someone else to do your due diligence. You know, no one really cares as much about your money as you do. So it's your real estate business, so you need to treat it as such. You may not know the laws in the state that you're looking to invest. If you have a partner who lives in that other state, then you want to make out a long, long list of things that you want answered and get those answers before you take the next step. Never assume that someone else, even a partner, will get all the answers you want or need. For larger purposes, purchases, I would even go to the property, lay my eyes on it before closing at some point, even before committing to money on the deal. Even if your team did a lot of pre-work, in fact, you want to have all this pre-work done before you go out and mess with it anyway. Number 6, not properly analyzing the local and regional economy. You know, you need to find out about the unemployment rate, other properties, what they're selling for, find out about the county plans, the growth trends in the area, and all, you know, you even get down to the block and everything. I used to even find out how long it was going to be before the next Walmart was coming in town and where it was going to be. You know, what good is your own apartment building if there's no renters? This can result in a huge drain of money. I know there's some places that the unemployment rate is so high that people live together, as in families moving in with other families because they can't afford it. Notwithstanding all the other problems that come with low occupancy rate. And there are others besides just not having the money. You can make the transition from single-family investing to commercial, or you can even start with commercial, and many of the same rules apply. But there are key differences, and you need to make yourself aware of those differences, because that's when you can fall flat on your face. You cannot imagine the problems that you can encounter, especially when you're not prepared. So you need to prepare for all kinds of things that you don't even know. The more you get up to speed on how to safely invest in commercial real estate for a profit, the better you will be prepared. There's no guarantee that you will make a profit or that you won't run into problems. There are deadly mistakes, and it's important to know how to avoid them. To make money as a commercial real estate investor, you need to start with 3 things. The correct property investment choice is number 1. Number 2 is the current, relevant, and proven knowledge in the real estate business. And number 3 is a clear plan on how you're going to sell or make money on this property. All of these are important and help you size up the commercial real estate market and pick a sub-niche that will best work for your objectives.
Hey, Norm Reed here, back again. Hope you took away something from what you just heard that you can use in your business. Here's the deal, and an action plan of sorts to assist you in taking the next step towards success as a commercial real estate investor. Over at PropertyInvestingInformation.com, we have a 7 Steps to Commercial Success email course, totally free, that's jam-packed with information critical to the successful commercial real estate investor. I mean, I advise you to take a minute to check it out. And of course, like most of the stuff over there at the site, it's totally free. We just want to help you kind of get in the game or be more successful in the commercial real estate game if that's your goal. Hey, the web address is www.propertyinvestinginformation.com/7 steps. That'll take you right to the page. You can get signed up. Hey, it's totally free. 7 steps to commercial success in commercial real estate investing. Pretty awesome stuff. Again, Norm Reed here, www.propertyinvestinginformation.com/7 steps. Go there now. Talk to you soon.